Hello everyone, welcome back to Fundrise Finance. In the first week of May 2022, when JP Morgan had announced a new ETF, JEPQ, which is the JP Morgan Nasdaq Equity Premium Income ETF, I was really excited because this ETF was using covered call options on the Nasdaq 100, similar to its sibling JP, which was doing the same on the S&P 500. I had made a video then showing what I liked about this ETF and how I thought it would do good compared to QYLD, which is a very popular Nasdaq 100 covered call ETF from GlobalX. So now that it has been just over 2 months that this ETF has been launched, I wanted to see how it has done against its benchmark, its fellow ETFs, to get a broader picture. I know 2 months is a less time period, but the last 2 months have given us a lot of ups and downs in the Nasdaq itself. So we can actually see how this JEPQ ETF has done in this volatile market so far, giving us an idea how it might do going forward. So for comparison, I'm considering QYLD, which is the Nasdaq 100 covered call ETF from GlobalX, and NUSI, which is the nationwide Nasdaq 100 risk managed income ETF, and QQQ from Invesco, which tracks the Nasdaq 100 stocks. So when we compare these four ETFs against each other, here we can see that we have 45 days of trading window from 4th May till 8th of July. So in this chart, the red line is represented by JEPQ, the blue by QYLD, green is the NUSI, and pink is the QQQ. As you can see here, in the last 45 days, the best performer has been JEPQ, returning minus 6.73%, followed by a tie, actually I would say, between QYLD returning minus 10.28 and QQQ returning minus 10.22%, and the last we have NUSI returning minus 10.76%. So as we can see here, JEPQ has not only beaten its benchmark, which is a QQQ Nasdaq 100 stocks, but also closest two ETFs in the same category, which is a QYLD and the NUSI. So yes, JEPQ has held up very good in the last 2 months, I would say. But mostly investors invest into covered call ETFs for their income capabilities. Let's see how JEPQ has done in that area over the last 2 months. So here JEPQ currently has a yield of 8.69% and has paid twice since its inception in early May, once with a pay date of June 6th and second with a pay date of July 7th. QYLD currently has a dividend yield of 11.72% and has been paying its dividends every month. Then we have NUSI with a current dividend yield of 7.77% and is also a consistent monthly dividend payer. Last we have the QQQ, which is not exactly a dividend paying ETF. It has a very low dividend of just 0.71%. So mostly QQQ is bought for its growth and not the dividend. So it would not be fair to compare JEPQ with the QQQ at all from a dividends perspective. So let's keep our discussion limited to QYLD and NUSI. So with comparison of JEPQ against QYLD, here we can see if we start the investment on the same date, which is May 4th, that's when the JEPQ ETF was actually started, we can see that with dividends reinvested, JEPQ currently can hold up to $9,327, whereas QYLD holds up to just $8,970. Here we can see that JEPQ returns slightly higher than QYLD, by almost $400 in the last 2 months. And when we compare JEPQ with NUSI, we can see even here JEPQ handily beating out NUSI by almost more than $400. But the best part that I like about JEPQ is what I see also in its sibling ETF, which is the most important aspect of investing, in fact dividend investing, is that the principal invested should be protected. With the covered call ETF such as QYLD, your principal actually deteriorates over time. Yes, you do get paid dividends along the entire investing journey, but still the principal invested goes down. Same can be said about NUSI also, whereas your initial principal invested actually doesn't hold up. But with the strategy that we see in JEPI is that it just doesn't not only rely upon your covered call options, but also the actual underlying stocks. Here if you just look at the top holdings of JEPI, we can see that apart from its own covered call, or in fact what they call as equity linked notes, we can see it has actually proper stocks in its holdings. We can see Progressive, AbbVie, United Health, Bristol Myers, Hershey and Coca-Cola among its top 10. And with this ETF being actively managed, what we can see here is the fund managers actually concentrating into your staples and healthcare sector, mostly into the top 10, which means the fund managers are actually looking at the market, how it's behaving, and adapting accordingly, which is the best part of it. With QYLD and NUSI, we don't see that happening because they just blindly follow the index and do the covered calls on that. But with JP and JEPQ, the active management really helps out the investor also. And similarly, if I look at the JEPQ top 10 holdings, we can see Apple, Microsoft, Google, and Amazon being the top 4. And then we start seeing the equity linked notes, and we also have Tesla and Meta. So the equity linked notes actually give that extra punch of getting more dividends, but your underlying stocks are actually giving you returns. And that's what actually I'm really impressed about. I really like SID strategy. I agree, I may not be getting a real growth similar to what QQQ does, but QQQ is very poor in dividends. So what ETFs such as JEPI and JEPQ do is give you that balanced approach of, yes, you get enough growth, but also you get that good nice dividends paid monthly. I followed the same investing approach into my M1 Finance portfolio also. So what you see here is my dividend income pie of the portfolio. Here I have ETFs such as SCHD, JP and DEVO taking up 70% of my portfolio, or I would say of the pie. Then the covered call ETFs of RYLD, XYLD and QYLD take up 10% each of the remaining 30%. So currently M1 Finance doesn't allow me to actually invest into JEPQ ETF because it is not yet available over here on this platform. But as and when M1 allows me to invest into JEPQ, I would gladly shuffle this portfolio to add it. I would take out QYLD, and in fact I would take out XYLD also, because I anyways have the JP doing the heavy lifting of covered call ETFs as well as investing into S&P 500. So maybe XYLD and QYLD I would just dissolve and have JEPQ in their place. So that has been my take on JEPQ's performance in the last 2 months since it started. I really liked what it has done so far, and I'd invest into it the moment M1 Finance allows me to. Hope this video has been valuable. I would really appreciate if you could hit on that like and subscribe buttons, and also that bell notification so that you're informed whenever I post valuable videos in the future. And also do provide in the comment section what you liked about this video or about this ETF JEPQ or any other alternatives that you might think of. Let's keep this discussion rolling. Until we meet in the next video, let's do as much as possible to be financially healthy. See ya. Bye.